Hi there, welcome to a new week. So as usual, what we're gonna do in this week's video over here, quickly summarize what has happened for the past week, and we'll take a look into the upcoming week's events, and we'll dive into the technical analysis as well and see if there's any opportunity that you definitely want to keep an eye on. So quick one over here, on last week's, we do have a couple of central banks coming in. So we have the Feds, which decided to hike rate by 0.75%, which is historically, quite a significant hike. And the forward guidance over here from the Fed is that very likely we're gonna see another 0.75 hike in the next FOMC statement as well. Okay, so do take note that because of the forward guidance, the market might price in that the Fed will be doing that in the next time as well. Okay, another one that came in was the SMB. So the SMB was pretty much a surprise because nobody actually expected it to rate hike, but the SMB decided to hike it by 0.5% from the previous negative 0.75. It has raised it to negative 0.25, right? So that's the reason also where we do see the Swiss franc actually strengthen quite a bit because of that surprise element from the SMB during the particular event. Okay, and the last one that happened last week was the Bank of England. Okay, so we do see the Bank of England hiking it by 0.25%, but that's not something that is a surprise because the market has already anticipated that it's doing it. Okay, so that's the three primary focus that happened last week. Now, if you take a look into next week or the upcoming week, we do have a couple of data that is, I would say, tier 1, quite important. Okay, so first one over here is on Wednesday. On the pound, we have the CPI year on year, which you can see is right now around 9%, which is quite significant. Okay, and naturally a lot of central banks right now globally are looking at the inflation pressure. So if this CPI year on year comes in hot, right, somewhere around 9% or even higher than that, then we'll expect the Bank of England to continue being hawkish and in a tightening process. However, if we start to see CPI starts to cool off a little bit, okay, then of course Bank of England need not be too aggressive in terms of hiking, and that might have an impact in the pound as well. Okay, now the other one is the Canadian CPI, which is coming in on Wednesday as well. Okay, so this is a month-on-month data, and you can see over here the general consensus is that inflation pressure is going to continue to pile up. Okay, so to take note of that as well. Okay, other than that, it's a relatively quieter week if you compare it to what has happened last. The main part over here, I think, the focus would definitely be on the pound CPI and the Canadian CPI month-on-month. Okay, so those are the risk events that you definitely want to keep an eye on for the week ahead. Now let's go into the technical portion. Okay, so first up, let's take a look at the dollar index over here. Now if I bring it to the daily time frame, okay, one very obvious technical setup over here is that we do have a divergence building up on the daily time frame on the dollar index. Okay, a divergence simply indicates that while price is moving higher, it has a new high. RSI momentum indicator is actually not printing a higher high. Okay, so that's actually an indication of a momentum lagging, or we call it a divergence, which most of the time this will indicate a high probability of a reversal. Okay, so going into this week here, I'm not surprised if the dollar decide to have some kind of reversal. Whether is it going to be a short-term or a long-term reversal, of course we need to see how the price react, but I would suggest that you might want to be cautious buying into the dollar going into this week, because there's a good chance we might see some kind of correction or even a potential reversal from here. Now the key level to definitely keep an eye on is 105.80, which is where the previous high was. Now if going into next week we start to see a little bit more upside and the market continue to crawl towards 105.8, that might give us a very decent double top formation for a potential sell trade in the dollar. Okay, of course, if you don't trade the dollar directly, you can look into some of the major pairs over here. Okay, primarily will be on the euro dollar. Okay, so euro dollar, you can see on this scale we do have a very nice double bottom formation over here, and the market kind of bounced off pretty strongly. So as long as the market is able to maintain above 1.0365, I would say short term wise, you can look for buy opportunity to the upside. Okay, of course we do have kind of like minor resistance zone around that 1.06 level as well, where we see kind of reaction on a pullback. Okay, so for me next week, I would say on euro dollar, you definitely need to have a strategy to look into trades. Okay, but the general direction that I'll be focusing more is, can I get a buy opportunity to the upside, at least for the short term, with a potential target back to its previous high at 1.07730. Okay, so that's on the euro dollar. Pound dollar over here, I think it's also very important to keep an eye on where you might get an opportunity next week. Okay, now we do have this little V-shaped formation here, though I don't really like this pullback. Ideally I want this pullback to be gentler, but it seems to be a little bit steep. Okay, but let's take a look. Let's keep pound dollar in our watch list as well for next week, because there's a good possibility in combination with the CPI coming in. Okay, we might see a little bit of volatility on the pound, and that might present a decent trade opportunity as well. Okay, so for me in terms of GBP USD, as long as the market is maintaining above 1940, I would say I would be focusing more on the upside. Okay, so ideally maybe a little bit more of a consolidation here, and that will give me a very good opportunity and probability to take this trade higher, with my first target at its previous high around 1.2660. Okay, so primarily we are riding on the dollar weakness, which is incongruent with the dollar index perspective as well. Okay, now in terms of Aussie and Kiwi, it's not the best and the clearest one right now. I think going into this week, there's good chance that Aussie and New Zealand will probably continue to be consolidating, so you might not want to pay too much attention on them yet. Okay, so same thing here on the Kiwi. Dollar Canadian, you might want to keep an eye on it, because over here this might form a potential double top formation. Okay, it's still a little bit too early to say because we don't really see a very strong reaction or rejection from there, but price has yet to be able to break above that previous high. So currently it seems to be doing a little bit of a double top, and maybe this will just give us kind of like a relief correction to the downside. Okay, now I would say overall, if I bring you to the daily time frame, dollar Canadian is still a little bit more on the bullish side, where I would say upside opportunity and profit potential is definitely bigger, and I will want to focus more on that direction. Okay, where you can see if it's able to break above this top channel line, it opens up a lot of upside for dollar Canadian to keep going higher. However, of course, on the 4-hour time frame, perhaps this week we might see a little bit of a pullback, a little bit of a correction. So I'm not so interested in selling it yet, but I'll be more interested to see how it develops from here, and do I get a buy opportunity. Okay, so that's a trade on dollar CAD. In terms of dollar franc, okay, this is where last week we had that surprise element in the market, and you can see a very huge strengthening of the franc. Okay, now dollar franc going into this week, I think there's a short-term opportunity we can take a sell. Okay, given that if let's say Monday we're gonna see a little bit more consolidation here, we can at least take a short-term trade with, of course, a very primary target around 9550. And if let's say that level is able to break through, then our next target, if I go to the daily time frame, will be all the way back to the previous trend line over here, which you can see previous support, and there's a good chance the market might come back and retest this. So the area of that will be somewhere around 9300, which is also a psychological number. Okay, so I think dollar franc will be definitely a decent opportunity to be considered next week. Okay, given that if let's say on Monday it continues to consolidate, this will give us a very decent and valid setup to take the trade to the downside. Okay, next one over here on the major pairs, we do have the dollar yen. Now dollar yen on a 4-hour time frame seems to be doing a little bit of a V shape, but the market has yet to be able to break through the previous high around 135.55. So I would be cautious in buying the dollar yen for now, but I would like to monitor how the market reacts around that zone at 135.55. Okay. Now, if the market were to do and develop into what we call crawl, which is a diagonal setup, and that gives us a potential double top, I would be interested to take a short-term sell on the dollar yen as well. Okay. The only time I'll be looking to buy the dollar yen is if the market is able to break through 135.55 and it decides to do a little bit of consolidation, then I will be bullish on that. Right? Until that happens, I will be focusing more on the sell opportunity for the dollar yen. Okay, so with that, let's take a look at the gold market as well. So gold market has been consolidating quite a while. If you take a look at this, okay, we do have a bit of volatility, but if I were to put a previous high and a previous bottom over here, you do see that we are basically in a range bound environment. Okay, so my bias on gold right now is definitely on a neutral perspective. Okay, because the market right now, if I frame this previous high, previous bottom, the current market price is basically in the middle of the range, and that does not give me a very good opportunity or even risk to reward ratio for either direction that I'm going to be looking at. So what I want to see on gold is either for price to go up and retest the previous high, potentially a short-term sell, or if price were to come down and retest the previous bottom, that will open a potential short-term buy opportunity. So for now gold, I would suggest to maintain a very neutral perspective, wait and see how the market react and develop as it moves closer towards the top and the bottom of this range. Okay, lastly over here we do have the S&P general indices. Okay, equities market hasn't been doing well. Okay, and we're seeing of course a sell-off in it. That is not something surprising, because if you understand the macro flow, okay, macro analysis, when the Fed is basically tightening, hiking rate, being hawkish and bullish, it's not going to be beneficial for equities, and naturally there will be a sell-off, right? But this year of course is not easy, because I would say if you sell it, it's not so straightforward as well. We do see kind of sharp bounce from time to time. Now if you look at it from a technical perspective itself, S&P right now is actually presenting a divergence as well. Okay, which means on Friday, as the market continues to fall, we don't really have the momentum to follow through, and based on our side we have a divergence, and this again indicates there's a good possibility of a short-term reversal. So it's not the best time to be selling, but if you're looking for a buy, probably it's gonna be a short-term buy, and it's not really like the bottom where it's gonna potentially reverse, right? I don't think that's gonna happen soon. So on equity side of things, if you're looking to short sell, might not be the best time. If you're looking for short-term opportunity to buy it as a reversal, short-term relief rally, definitely you can look out for it. Okay, because we do have that divergence, which high probability tell us we might get that reversal, at least for the short term. Okay, so that's on the S&P side of things. Lastly over here we have is Bitcoin. Now the crypto market has been hit quite hard for this entire year, but last week Bitcoin actually broke a very significant level, which is around 30,000 mark. Okay, and right now it's kind of testing the 20,000 mark. Now if I were to zoom out all the way, you can see there's not much of a really support level until the market comes back towards the zone, which is around the 14,000. Okay, so based on this perspective, there's a good possibility we can see Bitcoin continue to fall, perhaps towards 14,000. Okay, now if you are looking to buy into crypto, I would suggest to stay out of the market for now. It's a little bit risky to be buying it. If you're looking to sell it, okay, I think then what you want to do is give it about maybe a couple of days, Tuesday or Wednesday. If you start to see we have a decent pullback, okay, there's a good possibility this can continue falling and you might want to look for sell opportunity. Okay. However, if you're interested in trading into crypto, just make sure you're aware of the volatility. Essentially, it's still a very speculative asset, okay, and it's definitely riskier to be trading them. Okay, so make sure you manage your risk very, very well. Good. So that's all from me for this week. Okay, I don't think there's a huge lots of opportunity for us for now, but that's how the market is, right? Some weeks we have like clear-cut opportunity, especially for the last 2 weeks. Hopefully you are also able to capitalize on those opportunities and make some decent profits. But the market is how it is, right? Sometimes you get clear-cut opportunity, sometimes you just need to be patient and sit by the sidelines, wait for the market to present itself before you pull the trigger. Okay, so that's all for me. All the best for the week. Okay, and I'll see you guys again real soon.